Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday. Hope you all had a wonderful weekend. October 24th today, and no economic news releases are scheduled for today. We do got a pretty busy week ahead of us, though. We do have a lot of housing numbers are going to be released, and the CPE, which is the Fed's favorite gauge for inflation, later this week. So we will have a very volatile week this week. And of course, the headline news, which will be the biggie this week, will be Greece and the euro debt situation. So that brings us to the headline news. The stock market is up today, and a lot of it has to do with a little bit of it's the corporate earnings. A couple of different corporations like Caterpillar were up today. And then optimism about resolution to the euro debt crisis. So they met over the weekend in Brussels. I believe it's up. They basically have to have this by Wednesday. So we should know something by Wednesday if there's a resolution. If not, well, we probably could see a big change in the market go the opposite direction, as this would be probably one of the worst case scenarios. So let's go ahead and jump into see how the bond market's reacting to everything and what the again what the how interest rates are being affected by this. As you can see here, we've been kind of going in a semi sideways pattern here since we've had this drop here in the bond market about 2 weeks ago, and we're kind of in this range here between high 100 and low 101 range here. So we've been kind of in this range here, and meanwhile the 10-day moving average has been coming down, following suit, and of course that kind of pushes it down. As we can see, we're up here, we're knocked down. We started off lower today. Even went a little bit lower. We're at 6 basis points under. We were at 1.12 basis points under. So this 10-day moving average actually kind of pushes it even further. It's going to be more difficult for it to jump upwards. And that could be, by Wednesday, that could, if we were going to have an improvement in bonds, that could spark a rally as the stock market would be crashing. Whereas the opposite direction could happen. This could play the opposite effect. So Wednesday's going to be a big day. Rates are a little bit has worsened a little bit again today versus Fridays. Again, we didn't have any economic news releases on Friday, just more headline news, which was again optimism going into the weekend for the debt crisis to be resolved as those leaders over there were meeting in Brussels. So stay tuned. I got a little bribe for you guys, and hopefully you guys will enjoy it.